Silver has more in common in 2024 with copper. There's an investment demand like there is for gold, but silver, by far and away, more use comes from, it's an electrical component, right? It's a conductor of electricity, that kind of thing, green metal. So silver's got more in common with copper. Silver's going to play along, okay? And that's this whole spread between Shanghai and COMEX is going to continue to widen, and it's going to force the price higher. And so I tell everybody all this just so that as further argument that even though price for silver is at 11-year highs, it's probably going higher. And you want to be regularly accumulating it so that you're buying on dips and you're buying on highs. But the main thing is you're buying because it's probably going higher.
Economist Craig Hemke asserts that the growing demand for industrial uses supports the argument that silver prices will continue to rise, making it prudent to accumulate silver regularly, regardless of short-term price fluctuations. Silver prices extended their rally on Wednesday, reaching approximately $32.25 during early European trading hours. The white metal has been trading in positive territory for the fourth consecutive day, driven by increasing industrial demand. However, investors are awaiting critical U.S. economic data this week for fresh impetus. All eyes are on the preliminary U.S. gross domestic product, GDP numbers for Q1, set to be released on Thursday, and the Core Personal Consumption Expenditures, PCE price index, due Friday. The Silver Institute projects a 9% rise in total industrial demand for silver this year, reaching 711 million ounces, largely driven by the photovoltaic sector. Additionally, UBS analysts expect a significant shortfall in the silver market, forecasting an undersupply of 215.3 million ounces for the year, representing 17% of global demand. This shortfall is likely to contribute to the upward momentum of silver prices. Despite these promising trends, Hemke cautions against expecting silver to surge to $62 an ounce by the 4th of July, noting that the market operates in stages with periods of consolidation and pullbacks. Silver has been the star performer in the first half of the year. Since the beginning of May, silver has outperformed most of its competitors, surging by over 25%, while gold has advanced by 6.2% in the same period. Hemke also reflects on the intriguing dynamics of this year's gold and silver markets. The year started with high optimism for interest rate cuts, which brought the dollar index down to 101. However, this optimism was quickly tempered by the prevailing economic conditions, leading to a challenging start for both gold and silver. Join us as we delve into Craig Hemke's insightful interview. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
Well, it's been quite an interesting year so far, that's for sure. We began the year at kind of a peak optimism in terms of rate cut expectations, and the dollar index was down to 101, and all of that seemed to be a little too aggressive, given where we were economically. So as the year started, you had to figure, okay, at least the first couple of months are going to be kind of tough for gold and silver. And they were kind of tough. I mean, gold and silver both going down for maybe till about Valentine's Day. And then gold started to perk up. It actually then formally broke out of about a 3.5-year price range back on Friday, the 1st of March, rallied $100 the next week on, just people being enthusiastic and seeing that breakout. And then, we're up another couple $100 from there. Again, in the face of dwindling rate cut expectations and a rising dollar. So that was all, caught even me. I mean, I was caught kind of flat-footed by that too. I was expecting, maybe this will happen by summertime, as it's pretty clear the economy is slowing, but instead it takes off. Silver waited about a month, was watching what gold was doing, and then said, okay, I want to play along too. And so on April the 1st, silver took off. And now here we are 8 weeks later, and it's gone from about 24.50 up to 32. So what's that, 30 some odd percent? It too has now broken out of that about 4-year trading range, and that's gotten a lot of people's attention. That the tough thing I shouldn't say tough thing. The challenge to remember is that even though the pricing ability is demonstrably shifting east, it hasn't fully shifted there yet. And as long as the derivative and the paper markets are still playing a role in London and in New York, you're always going to move up in stages. So yes, it's great. Silver's broken out. Yes, it's fantastic. It's $32 an ounce, but that does not mean it's going to be $62 an ounce by the 4th of July. Okay. That's just not how it works, man. And you mentioned part of that. Then again, you get you get rally, get people to come in, and then price kind of rolls over, and then it kind of flushes back out, and then pulls back, and then it's ready to move up again. And that's just kind of the ebb and the flow of how price is discovered when you trade derivatives to do that. And so we should still continue going higher from here, but it's not straight up like some people would hope. There's these ideas that are, some people say, are opposed to each other. Somehow they're mutually exclusive, but they're not. The bullion banks can manage and manipulate the price of the precious metals to certain price targets almost on a daily basis. But that doesn't mean price can't go up. I mean, that evidence is right staring you in the face, right? Gold's gone from $400 to $2,400 in the last 20 years. But the bullion banks, there's still a JP Morgan Global Precious Metals desk, right? There's still Citigroup. There's still, UBS, Goldman Sachs, go down the list. So there's money to be made. What they can't have is a 50% year. That'd be catastrophic. I think the best year we've seen, while we've gone from 400 to 2,400 is about 25%, 28% back in 2011. Okay. They can manage 10%. 30%, 50% is a whole other deal. And that gets back to what you mentioned earlier, then again, about the four heads of different bullion banks, these trading desks, JP Morgan and HSBC, and I can't remember what the other two were, all ran over to Shanghai back from a period of late March into early April. I mean, there's Reuters stories on all four of them. Some of them use the same picture.
Efforts among BRICS countries and other nations to develop alternative currencies for international trade are gaining momentum. The upcoming 16th BRICS summit, scheduled to take place in October in the Russian region of Kazan, is expected to reveal significant developments in this area. The BRICS bloc, now expanded to a 9-member alliance, is considering the consensual launch of a new currency. Anil Trigunayat, an Indian financial expert, has highlighted the growing support for this initiative. He noted, "The proposal to introduce the BRICS currency is gaining steam. This new currency aims to serve as a reliable alternative to the US dollar, which currently dominates international trade." Expert Craig Hemke points out that introducing such alternatives could have significant implications for the demand for the US dollar. As these countries gain confidence in a stable and reliable alternative currency, their reliance on the dollar will likely diminish. This reduced demand, combined with the continuous increase in the supply of dollars due to rising U.S. debt, could exert downward pressure on the dollar's value. Let's get back to the interview.
We're going back to 1944 or 5. All the World War II veterans are all dying off. And so it's like, well, it's always been this way, so it's always going to be this way. No, it's not what history would suggest. And as you point out, there are a couple of things that have happened last couple of years that are like, the term dying by 1,000 cuts kind of thing. These are pretty substantial cuts. Back in March, right after the Ukraine war started, back in March of 2022, the U.S., as a way of sanctioning and punishing Russia, froze their non-domestic foreign currency reserves and kicked them out of the SWIFT system, which is the international payment system. They allow you to do business internationally, thereby kind of making the impression that you better play ball. You don't want to get side. It doesn't matter what you think, what anybody listening to us thinks about Ukraine and Russia and all that kind of stuff. What matters is what the Russians think in this case. And if they look back and other countries go, let's see here, if we ever get sideways with the U.S., they're just going to kick, and it's inevitable we're going to get sideways with the U.S. because we have our own national interests that we're going to pursue. And at some point, the U.S. is probably going to decide that's counter to the U.S.'s, and therefore they're going to kick us out of SWIFT and seize our foreign currency reserves. So when that happened, that was a real blow to U.S. dollar hegemony, if you will. It doesn't mean it. Obviously, the U.S. dollar is still the most widely used thing in global trade, and by far the largest held item in foreign currency reserves in the world. But it definitely, the events of early 2023 or 2022 it kind of spun the wheel towards getting rid of the dollar, de-dollarization a little bit faster. And so where do we stand now? We've got all this talk about whether the BRICS countries, Brazil, Russia, India, China, South Africa, go down the list, how many BRICS plus, whatever you want to call it, are going to come up with an alternative to the dollar. Not something, it's not because I see this a lot too. It's not like it's binary things. Like one day it's a dollar and one day it's something else. No, it's just it's an alternative. It's competition to the dollar. And if China and Russia and India and, go down the list have a unit that they can conduct international trade in, that they have confidence in the value of it, not fluctuating up and down 20% in a month, but it stays relatively stable. They have confidence in that unit. They're going to use it. And if by using it, you decrease demand for dollars, right? And your audience is smart. They probably understand the supply and demand. You got supply, you got demand, and where they meet is price. Well, if you increase supply, which is what we're doing day after day, month after month with more and more debt, while at the same time you are decreasing demand by virtue of, these alternative currencies, well, then the value of said good falls. The price falls. And that's ultimately what all this means. Boy, that was a long answer.
Considering the potential benefits and challenges that BRICS countries might face in establishing and maintaining a new global currency, how do you think introducing a BRICS currency will impact global trade dynamics and the current dominance of the US dollar in international transactions? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.